All right, guys. So we are going to do just a quick little video this morning. Friday was kind of a slow day. We had a great move in the overall market. The S&P was up 0.5%, so that's a pretty good move. Continuing to look at this daily chart here, just looking absolutely phenomenal, sitting at all-time highs on the S&P still. The Nasdaq is approaching all-time highs. Dow Jones above all-time highs, and the Russell is still sitting here. That's why I think in that last video that I shared with you guys, the IWM, it's phenomenal ETF buy for the Russell 2000 ETF. It's got a lot of room to move upwards here. So just take an eye on that. Take a look at that. Keep an eye on it. Could be a good way to catch the broader market and not invest in like the S&P or something like that. So let me bring this back here to the SPY just so I can have that on here. So this looks phenomenal. I'm not going to spend too much time on the SPY. It looks great. We're moving in the right directions. Things look phenomenal. So we're going to actually talk about Palantir. So the fun one that I addressed in the last video. So we'll see here that we did get a push up. I think I did my last video. Let me see here. Just bear with me, guys. I'm just here, I'll just bring this over here. So 2 days ago, yeah, it was 2 days ago. So 2 days ago, I did a video on Palantir and Starbucks as well. But Palantir, I had the February 16th. See, my options chain is not loading. Sometimes that happens. See how this left side is all looks all in the money, blue's in the money. And so there's not a breakoff point at like 24 and 24.50. That should be cut in half right there. So the options chain is not fully loading right now, which is very odd. I don't know if my internet or I know my RAM on my computer has been struggling lately, so but I still should be able to show you the 23s even with it looking like this. Yeah, I can still show you this. So I was showing you guys, so when I sold these, I told you guys I bought them back here at 59 in December, I believe. Yeah, 59 was like right around here. Yeah, back in December. Rode them all the way down to the bottom. These are the Palantir Feb 16s, 23 call options. Rode them all the way down. Pretty much thought I wasn't going to be making any money on them at all. Thought that we might have a little bit of a pop, which we did, but I took that pop right here and sold out at 39. So that's I took it from 59 to 39. I think I only had 10 shares or something like that. So wasn't a huge loss, but absolutely terrible in the FOMO that I'm looking at now because I sold out of that position completely. And I probably should have held at least one to help mitigate some of the losses because obviously as we're looking at the options chain here in the chart, it continued to move upward quite aggressively on me. So since I sold on Tuesday, yeah, so that was the pop right here. I was like, oh, that's a decent pop. I'll sell out. I doubt it will hang up there. If we look at let's go back here. Tuesday, that was right around here. There was a level that I saw that I didn't think that it would break past. Shit, I should have looked at what the Tuesday price was. The Tuesday price, we're looking at 2080 kind of. That's a good spot to look at. Let's go back to a 3-year. 2080. Yeah, so that's exactly what it was. It was the peak of this point here, the peak of this, and starting to break into resistance right here. So I thought, okay, yeah, it might bounce and it might come back down. I still think Palantir, I'd still have the shares that I have. I think it's gonna push up to 40 and 50. I think it looks like a phenomenal chart, and there's a lot of good news coming out about it. But normally you get a little bit of resistance at these other levels. So it peaked here at the 2080. Yeah, 2063, 2080. So there was just resistance in this area, right? So when I saw that move there on Tuesday, I said, all right, let me at least get out of this position, take the loss that I took. Let me see if I can find. I'm just using that percent calculator again. So we're going to go 59 to 39. I mean, shit, it was a 33% loss. So not the best, but it's better than a 50, 60, 100% loss, which I've had plenty of those as well. So we're going to talk about this a little bit more. So so yeah, so sold out around here, and then Palantir continued to move up Wednesday morning. I was just having so much FOMO, saw it go up again, and then saw it open here on Thursday a little bit higher, bounced off the highs of Wednesday and continued to push up. So I think these got up to like 210 was the highest. Yeah, 220. So again, sold out down here. I had them at 59. So anywhere's through here. I mean, geez, if I would have just held till the next morning, I could have made money. I doubled my money. You'd take 59, call it 60 to 120. So you're doubling your money there. And then obviously they moved all the way up to 200. So let's just say if I had it at 59, let's say I sold at 200. So you're looking at a 238% gain instead of a 33% loss that we took. But again, guys, that's options trading. That's what happens when you get into these types of plays. And yeah, you got to take the good with the bad and you got to mitigate your losses. So what I'm going to try to work on, what I really want to try to work on this weekend, because you guys can see it's 7 a.m. here, Saturday, the 10th Eastern Standard. And I want to come up with a trading system. I have a really good developer from my web-based business that can actually write me some scripts and some code for TradingView where I can build a system, and I got to really outline this and map it out a little bit more. And I kind of want to make it available to everybody. But what I'm thinking, since I do real estate and all my real estate returns, at least the passive investments, they're called limited partnerships that I'm in. You put a amount of money into a syndication, and generally it's six figures or more, and you get a preferred return as a limited partner on something like that. So I'm in a few deals like that, and my preferred return is about 7%. They were upwards of 8, 9, 10% before and during COVID. Oh, excuse me. But now that things have settled down a little bit with rates a little bit higher, it's just the cash flows a little bit tougher to get those returns. So, and I'm talking about a cash on cash return. So you put $100,000 into something, 7% return, you're expecting $7,000 over an annualized return over 12 months. So that's pretty decent. I forget what let's look it up. Average return. S&P 500. Yeah, so average turn return of the S&P 500 says it's 9.26% over the last 150 years, December end it's inflation. Yeah, so that's pretty good. And then so you have the adjusted, and it's adjusted for inflation. The 150-year average stock market return, including dividends, is 6.93. The S&P hasn't been around for 150 years. So total return in 21 was 28%. Yeah, so the average return is 9%. I remember when I got into this, I was first paper trading back in the day in high school, and I remember our economics teacher telling us a 3 and 4% return was phenomenal, and that would be a great return in the stock market. And then when I got involved in it, like I told you guys in the last videos in 2015 and 2016, people were talking about the 6 and 7 and 8% return is what you should be expecting in the stock market. And so that is a much better return. I would say 6% minimum is what we're looking for on returns of investments. And I'm talking more mid to long term. This isn't options plays. Option plays, it's a whole different strategy, whole different methodology. But for stock investing over long term periods, you want to see, like, I mean, real estate, right? So I'm putting my money into real estate. I'm getting at least 7%. So stocks, you'd expect to be a little bit more lucrative. At least in my opinion, that's what I like to think. There's a lot more advantages to real estate with depreciation, and I won't get into that. That can be, I have another playlist on this channel that I would like to get into, and I'll talk about the real estate benefits and things like that as well. But there's a lot more benefits to stocks, or sorry, to real estate than there is stocks. but stocks move a lot quicker than real estate. Because I think the real estate, so say the average return on the S&P was 9.2. Um, let's do average return on real estate. Well, average return on real estate is about 10% as well. So they're both at 9 and 10%. So I might just be biased towards stocks, but that's why I'm diversified in both, right? So I have money in both. And so they're both growing about 9, 10%. So what I was getting at when I started this ramble here is I want to come up with a methodology or a system, it's essentially a script that's going to be doing it for me. I have to really line it out and figure out, oh, excuse me, the logistics of what stocks I'm going to have it trade. They're going to have to be stocks that move quite a bit. And so generally you're looking at like a Tesla. That's something that moves pretty aggressively each day. You're getting a pretty big swing one way or the other. And so what I'm going to want this trading system to do for me is essentially average out at about a 7% return. That's what I'm looking at, 7, 8% return. So you're gonna need to sell out of anything that's a four. So your stop loss would be 4%, nothing more than 4%. It would always sell off at 4%. And then your stop loss for gains would be, what would that be? 12%. So you have a total of 16 divided by 2. So averages out at 8%. So there's going to be nuances to that, right? Because at 12%, if it continues to run up to 14, 15, 16, 17%, I want to have the benefits of that upside as well. So the biggest thing is going to be making sure that I don't take any more than a 4% loss on all of the trades. And these will be a little bit more trading type style investments they'll just be a little bit shorter term than my near term outlook. I have a lot of accounts that are just all long term outlooks, but I want to create a separate account and fund it with, I don't know, $5,000, $10,000 and invest in blocks of 1,000 at a time. So a 4% drawdown would what would that be? Is that $40, I think? So I'm gonna outline it this weekend, and once I have a better idea, a clear idea of how I want to set this system up to make sure, again, it's an 8% overall return minimum. So that means I can't take more than at least a 4% loss on any position. And then also a minimum of a 12% gain on any position. Because again, that averages out to 8%. So that's what I'm going to be looking for. I really have to outline that. I have to do a couple like mock systems and like tests to see exactly what that would look like and go back and just look at one of these positions, right? And just play it out. Say, okay, if I bought this option at 8 cents here and it went up to here, or if it came down, would I have got stop lost or would I have continued to roll this up? So I've got to just come up with a very strategic way to trade this system, but I will figure it out, and that's something I really want to focus on is just making sure I have some systems in place that are continuously making 8% over and over and over. Where I mean, the stock market, I own ETFs, S&P, all that stuff, where it's making me that 9% I've probably made over the 10 years that I've been in the stock market. But I want something that's more consistent and really mitigates my losses, because what happened in October, I got absolutely destroyed. I mean, granted, I'm back up and everything's back where it was, and I bought a bunch of stuff down here in October, but if I had stop losses in place for my shares, and also, well, I didn't really have any options at that time, but for my shares, I would have been able to get stopped out up in this area. And then once I saw a drop, I could have got back into positions and had a much higher gain. But instead, I wrote everything pretty much down. And then I just added to all my positions down here. And so then I've just seen this gain. Whereas this is the funny concept that not a lot of people really understand. So say you buy a stock at $100, if it goes to $50, and so you lose 50%, for you to get back to $100, that 50 going to 100 is 100% gain. It's so that you took a 50% loss, but you have to have 100% gain. And just so you guys understand that, because it's just pretty basic math. So 50, taking it 50 to 100, that's 100% gain. But if you take it 100 to 50, it's only 50% loss. So it's much easier to sell out of your losers. So taking stop losses is very, very important and something that I need to do a better job at. Um, I also like just buying and holding. It's been a fantastic strategy over the last 10 years. I mean, clearly, I mean, we've gone from 200 to 500 just buying the S&P alone. You're doubling your money. More than doubling your money. 200 to 500 was 150. Yeah, 150%. So, almost tripling your money. So yeah, that's what that's I'm just gonna put something in place, figure that out, launch it, figure out how it's working and everything and get back from there. But I have one other quick thing before I end this video. This was just kind of a rambling Saturday morning rant video talking about Palantir. Oh, I did want to talk about Starbucks as well, because there was a lot of people on Twitter that really thought that this was going to fly up, and I almost got caught into the hype. Damn, they did make their way all the way back up. That looks fantastic. That did great. There was a lot of people that were talking, oh, it's not even Starbucks. What am I talking about? It's PayPal. That's what we're looking at. There's a lot of people on Twitter that were talking about how PayPal, and granted, PayPal's numbers, their earnings reports came out, they really were absolutely phenomenal. They not absolutely phenomenal, they weren't bad. They performed very, very well. They have decent guidance going forward. So it's not gonna be it wasn't supposed to go draw down as much as it did right here. So everybody was talking about how this was going to be a nice bump. Like PayPal is finally going to get off these lows. And you guys know from my last video, I've rode this all the way from here, all the way up and down. So I'm still holding. So I was very, very optimistic to see PayPal start jumping back up and moving in the right direction, especially when you throw the 200-day on here. It was supposed to, right? But again, just like I was telling you guys in the last videos, there was multiple times in the last 2 years where it just broke these 200 days and then it died right back after. And so what did it do right here? It was breaking, and then earnings report came out and it died again. So it might make another attempt at this 200-day because again, the numbers were great. It really wasn't. This is so weird that no option chain. It's just my computer's memory is not working very well right now. It might make a run back up at that 200-day, but in the earnings were very good. So you would expect it to jump up there, but I almost got sucked into this hype. But luckily, I have enough shares where I was like, okay, I'm already betting to the upside with the shares that I have. I don't need to bet on the upside when it comes to stocks too. I know people that were spending 20, 30, 40, 50,000 on options for this to go up. And look, it did go up. I mean, when it first released, it went up, just like how that's why I had Starbucks up because I was thinking about that. Where I showed you guys that I had FOMO, where I knew it was going up. Now, and I'm still pissed. I had the 98s. I didn't have the 98s. I wanted to buy the 98s at 23, and they're all the way up to 150. So, yeah, that was a missed opportunity as well. Dang, my computer is just running terribly slow, so I apologize about that. But yeah, so keep an eye out for PayPal. It did bounce off here at the, what is this, about the 55.80 level. I don't know if that's any resistance from, I don't think it's hit that. Yeah, I guess it has. Let's see. Let's get it a little bit closer here. Yeah, so right here where it's kind of leveled off. See again, guys, it's just another volume pack type of thing. So see how it's like flattening out right here. There's a lot of volume through here. See if I can get a Fibonacci on this a little bit too. Yeah, it's tough to get it because you when you do a Fibonacci, you're looking for a high and a low. And since this has such a, I mean, this would have to be how you draw it, and it's just not going to give an accurate depiction at all. Yeah, because like the 50% is all the way up there. So it's just that's not a good way to look at that at all. Um, So yeah, we'll see what happens with PayPal. I'm not too optimistic on it because that 200-day moving average is a really big indicator, at least for me. And so until I see that come back above the 200-day and sit there for a while, I'm not gonna be optimistic about PayPal. But I'm gonna hold my shares. I'm just gonna hold my shares because again, I still believe in the company. I think it's a great company, but I mean, I'll start adding to my position too. But it's got it for me. I know a lot of people talk about this, but for me, it's got to get back above. Look at all this volume right here. So it's for me, it's got to get above, and I'd hate to see it because it's kind of shitty. So like first I'd be looking at obviously the 200 day, and then the next level would be right about here, the 73, because there's a bunch of volume here. And I'd probably slowly start adding right here at the 73 because it's breaking this high here. And then once it really gets back up over this level, the $100 level, and that's tough, right? I mean, shit. That's a big move. I mean, but they were at 300. So if they can get back over 100, if they get over the $100 mark, I'll load them heavy. I will load them so heavy because they'll move back to 300 for sure. But it just doesn't look good. Just like I was talking about in all the videos, it just looks like a dying chart. So yeah, that's PayPal. Last thing I want to discuss real quickly, guys, is this Tucker Carlson and Vladimir Putin interview. Absolutely phenomenal. If you guys didn't see this or haven't watched it, highly, highly, highly recommended. It was just a fantastic interview. It was very dry at the beginning. The first 30 minutes, Putin was giving a whole backstory of the history of Russia and how all the different countries were created up until today. And he gave very, very good reasons on why he believes what he believes. It doesn't make what he's doing right, but there is a lot of factual evidence that he provided during this interview that we don't know as Americans. I don't think a lot of people in the world know. And I think there's a lot of misinformation, which we all know about already, that is going out there and getting fed to us through the news outlets. And pretty much what Putin has said in this interview is he doesn't want the war. He doesn't want a nuclear war. He doesn't want conflict. He's just kind of been backed into a corner with the way NATO and America has not lived up to their promises, and there's been treaties and things like that we have just gone back on. And Putin's pretty much told America, hey, if you guys continue to move in this direction, which is the opposite direction from the treaties and things that they have talked about that they agreed on, then he will have no choice but to invade Ukraine. And like he literally has told America and all these other countries that that's what he was going to do, and we continued to push him that way. And so you'll see from a couple clips that, and I need to put those clips on the Roadie investing account too. I put them on my main account, but I need to put them on there as well. You'll see that what's essentially happening is we're funding the war, right? I mean, America and the European countries are funding the Ukrainians to fight this war, fight Russia to get them out of their country. And Putin said multiple times in the interview, they will not leave there until they get what they were promised back in history. That's the whole premise of this conversation, and why the first 30 minutes is dry is because he talks about how there's this whole history with Ukraine and Russia and all the territories that were over there. And I mean, shit, he goes back to the 17th, 16th century. He goes way, way, way back. But he brings it all current, and he does kind of bring it together. But yeah, there's just a big challenge, power struggle here, and that's what I was getting into is we're funding it, right? And so what's happening? Let's look at the actual number. Yeah, so 42 billion has gone to Ukraine. And this one says 75 billion. I don't know the exact number, but I know I just saw something on social media this morning saying that the House just approved another 60 billion to go over there. So it's just all of our tax dollars, all of our money that is being sent over there. And again, I don't think it's terribly wrong to be doing that. I like supporting other countries. I think doing the right thing is right. But at the same time, at what cost, right? What are we actually accomplishing? If Putin's never going to back down, are we actually going to win the war? And the one big thing that Putin said is if we do send military personnel there, actually our own troops, and not just funding it through dollars and equipment and military equipment like guns and tanks and shit like that, then it will turn into a larger problem. And then he did discuss it possibly going into a war. But that is, again, the last thing that he wants. He made it very, very clear multiple times that he has no aims or interest to invade any more of the countries over there or Poland or have any interest in going into a nuclear or World War III. He says there's no reason for, we have no interest in that. The only reason that we would get into a situation like that is if somebody attacked us, and he used Poland as the example because that's what Tucker asked him. He said, would you ever try to take over land in Poland? He said, no, absolutely not. The only reason that would happen is if Poland tried to attack us, and then they would obviously be defending themselves at that time. So go check out this interview, guys. It's very, very eye-opening. I know already our news outlet is saying Tucker Carlson's not a real journalist. He's not a real reporter. It's a bunch of bullshit because he was on one of the major news networks and he got kicked off. So now he's trying to do his own thing. He's asking real questions. It's just like the Nelk Boys or any of those other podcasts where people in like the Tate, like, and not that I love Andrew Tate, but they do real interviews and they ask real questions instead of just like a scripted interview where both the interviewee and the interviewer knows exactly how the conversation is going to go, and it's all just a movie script essentially. It's not an interview. This was a very, very good, candid back and forth interaction. Again, the first 30 minutes is very dry and slow because Putin was trying to make his point to bring everything together. But once you get past that 30 minutes, it's very, very eye-opening. And honestly, Putin wants peace. And there was an agreement put together between Ukraine and Russia before all of this started. And that's when that Boris Johnson, I didn't know much about this, but that's when that Boris Johnson from the UK came over and pretty much told Zelensky to not sign the documents. And so, and then the other big thing that I took from this was Biden and Putin haven't talked since before the war. And so Putin said how he had good relationships. I forget was if it was Bush Senior or Bush Junior. And he had great relationships with them, and he had great relationships with Trump. And again, not saying any of these presidents were better than the other. It's more of just having a personal relationship with all these other presidents and people that control their own countries and having an actual relationship. The fact that Biden hasn't even tried to talk to him or reached out, and Putin said there's no reason for him to reach out because everybody knows what he wants. He just wants some of this territory that he thinks is his from back in the history. But Biden and our administration currently doesn't want that, and they're just funding the war and taking a lot of the taxpayers' money. So I know I'm swaying a little bit right in this video, but that is my opinion, and love to hear what you guys possibly would think about this. But please go watch this. Just go to tuckercarlson.com. If you just go to his main page, it's right here on the front page. You can watch it for free. Again, 2 hours, first 30 minutes, very, very dry, but highly, highly recommended. I'm gonna keep doing these videos, guys, on stocks and what I'm looking at, what I'm seeing. I did just add a bunch more Bitcoin and Ethereum yesterday as well. Because if you guys didn't see that, that is starting to run a lot as well. Let's jump into trading view real quick here. Yeah, so you can see Bitcoin's, that's my little trigger. Bitcoin's starting to run again. So it was yesterday. What day was it? Yeah, when it pulled down, what is this? It's my 5 day. The 10th. I bought it on the 9th. Yeah, so it was right when it made this first spike. It pulled back around here. But I bought it on the 9th. Yeah, mine was on the 9th. So it's right around this area. I bought some more Bitcoin and Ethereum. So we're making another big run up to some highs, more recent highs. And you guys can clearly see that it bounced off of these levels here, it bounced off the 200 day, and now we're gonna launch again. So get ready to see a $50,000 Bitcoin, a $60,000 Bitcoin, because it's gonna happen, guys, with all this uncertainty in the world that's happening. It's definitely going to happen. There's a lot of opportunity with cryptocurrencies here. So I don't want to say get in now, but I would still get in because I see this potentially having another huge bull run here. If you got in at 13,000, kudos to you. I started adding once I saw these levels start to move. So I started adding more around the 30,000. So doing decent right now. But yeah, I'd love to see this hit 67. I'd love to see it go into a six-figure amount, 100,000. So I'm heavily invested. I've taken a lot of, I used to be, I was telling one of my business partners yesterday, I was the last year I was probably 60-40 cash and investments, 60% in cash, 40% investments. Now I'm flipped to the opposite. I probably have 60% investments, 40% cash, and I might even push that to 70-30. Everything's just looking good between Bitcoin and starting to make higher highs right here and really testing these levels. Once it breaks out of here, it's going to run. You have the halving coming up, and then the S&P at all-time highs, and the Nasdaq and the Dow all coming up at all-time highs. It's just coming into election year, what I talked about before. This is all just really, really good information. So yeah, guys, I would really keep an eye on what's happening right now because I think we have a lot of potential in the next 365 days. Not even quite, let's just call it 300 days until the end of the year. So get invested. This is not every video, I guess this is not financial advice. Do not take what I'm saying as financial advice as a disclaimer. But do what you want. This is just educational purposes only, what I'm seeing in the stock market. But let me know what you guys think about everything. I covered a lot of topics right there. And I think I did still run pretty long because I just get rambling. I get pretty passionate about this stuff. But let me know what you guys think. We will be back with another video probably on Monday or Tuesday once the market opens and some things start to move in different directions. If Bitcoin moves in any other direction, I'll keep doing updates on that. But yeah, guys, let me know what you think, and we'll talk to you guys soon. We'll see you.